Hi, I am Anna. I come from www.ntvforex.com. Risk appetite swings positive once more on robust COVID vaccine results video. http ntvforex.com news ID 8D5B77 7/15/2020 11:39:45 am. Market overview. Once more the daily seesaw of risk appetite has taken effect as sentiment picks up again. Could it be that this time drives a decisive move? The swing back to positive risk has been driven by the results of a COVID-19 vaccine by U.S. pharma company Moderna. Results were robust with antibodies present in all 45 test subjects. The development of a reliable vaccine is the key to opening the door to a serious recovery for markets, and traders will need to assess the implications of these results. Previous positive vaccine results have seen risk appetite peter out quickly in recent months. It is interesting to see that there was a decisive swing higher on Wall Street, that is continuing on futures today. The US dollar is under pressure across the major currency pairs. Higher beta majors are performing well. Is this move set to break markets out of their month-long consolidations? There have been some early calendar events that could also forge moves today. As expected, the Bank of Japan sat on its hands for its monetary policy decision, with no shift on rates or its yield curve control. However, UK inflation has ticked higher than expected on both core and headline, leading to an uptick on sterling today. For later today, the survey data from the New York Fed could give an early insight into July and will be an interesting watch. Wall Street closed strongly into the end of the session, with the S&P 500 1.3% at 3,198. US futures are continuing this move today, with E-mini S&P 0.8%. This is helping a positive Asian session. Nikkei 1.6%, Shanghai Composite 0.6%, although some of this move was tempered by the further escalation of tensions between the US and China as President Trump signed legislation on removing Hong Kong's special status. European markets look set fair this morning, with FTSE futures 0.9% and DAX futures 1.3%. In Forex, there is a risk-positive, USD negative bias as USD, JPY, and CHF all underperform, whilst AUD, NZD and GBP all pull higher. In commodities, there is consolidation on the precious metals, whilst oil has managed to pick around 0.5% higher. There is a North American bias to the data on the economic calendar for the rest of today. The New York Fed's Empire State Manufacturing for July is at 1330 BST and could be an extremely interesting release. Consensus forecasts expect the continued recovery to 10.0 from 0.2 in June. The U.S. industrial production for June is at 1415 BST and is expected to show recovery of 4.3% on the month after a rebound of 1.4% in May. Capacity utilization is also expected to recover back to 67.7% in June from 64.8% in May. The Bank of Canada monetary policy decision is not expected to cause too many surprises today, with rates forecast to be held at 0.25% once more. The EIA weekly crude oil inventories at 1530 BST are expected to show a drawdown of 2.3 m barrels following a surprise build of 5.6 m barrels last week. Chart of the day EUR/JPY. It has been a slow burn for EUR/JPY longs in recent weeks. However, after two strong bull candles and a close above 122.10 resistance, there are finally signs that the upside move is developing. However, this is still a market prone to intraday swings and retracements. Subsequently, chasing a breakout may not be the best timing, and we prefer buying into weakness. We discussed Euro-Yen longs last week on the break above 121.40, but a choppy week of trading broke a 2-month uptrend before the market swung higher once more. A close above 122.10 mid-June high has confirmed the bull control now, also being a move through the resistance of the 23.6% Fibonacci retracement of 114.40–124.40. This means that the market can begin to use this fib level as a basis of support and reopen the key June high of 124.42 once more. Momentum indicators are positively configured, with the RSI confirming the break to a 1-month high, stochastics turning higher again in strong configuration, and most interestingly a bull cross on MACD lines. We look to use intraday weakness as a chance to buy now. The 121.40 breakout is now a good basis of support and was once more yesterday almost to the pip, leaving a mini buy zone 121.40 122.10 now. Strong support has formed at 120.25 and is now a key higher low. Brent crude oil. This is a difficult period of trading on Brent crude as a number of contradictory signals are being thrown around. Daily candlesticks have fluctuated between positive and negative for 7 sessions in a row now, as any sense of decisive direction keeps being snuffed out. However, despite the 2-month uptrend having been breached last week, there is still little real appetite for a correction. It is as though the market is in wait-and-see mode. This is leaving momentum indicators consolidating their continued positive configuration, in a moderating mild drift back. Given the lack of selling pressure, this unwinding drift is a move to renew upside potential in due course. For now though, this remains a waiting game. The resistance at $43.95 remains the key barrier, and the big March gap at $45.20 would also be a significant resistance that the bulls need to take out in order to continue for a bigger recovery. This ranging period sees $39.50 as initial important support, whilst last week's reaction low at $41.30 comes in as a gauge for the bulls. Dow Jones Industrial Average. The bulls responded strongly to the announcement of encouraging COVID vaccine test results, and suddenly there is potential for an upside break of the recent consolidation phase. Over the past 4 weeks, repeated rallies have failed at 26,300, 26,610 resistance. In most of these cases the resistance has been punctuated by a failure candlestick. However, the buying pressure developed throughout yesterday's session and a decisive positive candlestick has now closed above 26,610 resistance. This is the first close inside the big gap, and with futures strongly higher again today, there is a very good prospect of the Dow now finally closing the gap at 26,940. This would be a key signal that the bulls have played out their period of consolidation and are ready to push on once more. The technical indicators are looking that way, as the RSI confirms the 4-week high, stochastics swing higher towards bullish configuration and MACD lines look to bull cross higher. The old resistance at 26,300, 26,610 now becomes our area of support, with the move to closing the gap at 26,940 would open the key June rebound high of 27,580, whilst the support at 25,525 is now a key higher low. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching.